Everything seems to be on waiting to see what happens next in the German election. But regardless, is there a feeling in the top echelons of German politics and German business that something needs to change?
Oh, yeah, massively. The election is all about economics. We've just gotten revised down growth forecasts from the IMF again. Last year was a negative year for our BIP. So in that sense, the structural weaknesses of our economy absolutely have to be addressed. Our growth potential has shrunk to only 0.5%. We're seeing job losses, so it's really important that we embark on a path of economic growth.
And I know that you and I have not crossed swords, but we've talked a lot about the amount of capital that Germany can spend if it were to tweak or abandon the Schuldenbremse as well, the debt brake, so to speak, as well. The power that could be unleashed by the one country, well, one of the only countries in Europe that actually has a little bit more leeway on debt. Others are near 100% debt to GDP. Just update me and our viewers on your views on how the German government finances need to change.
Well, I do think that there has to be some targeted reforms to the debt brake because we have so much need for infrastructure spend on railways, on roads, on bridges, on education, on 5G, 6G infrastructure, etc. So a lot of public infrastructure has to be provided, but the vast majority of investment of our country has to come from the private sector. So in that sense, in addition, we also have to set the right incentives to allow private investors to rediscover Germany.
Ask you one more question about what is going wrong with the German corporate machine, because the German business, I mean, the Siemens, the Thyssen's, the Volkswagens, these are mighty, fantastic post-war companies. What has gone wrong with some of these magnificent German companies?
Well, first of all, as you just showed, the DAX has scaled new all-time highs. So in that sense, the global businesses of the German companies is still going very well. The problem is that they're under stress in their domestic market. So that's the problem that we have to fix. But in general, the success of German companies in the globe, reflected by the stock price performance, is quite good. They're just we just need to offer them better conditions to invest and do research and development in Germany.
Let me probe a little bit further on the debt brake. I had the lucky position of interviewing Christian Lindner when we were in Washington. He strode over, man with a plan. Shortly after that, he was a man with a plan without a job. Effectively, the policy idea was to tweak the climate change targets to free up some money for an investment, but keep a very strict discipline. I wonder if he was not wrong, because in recent weeks we've seen bond markets rattle. Germany has been immune because you've had the fiscal discipline. Is it right to keep some fiscal discipline in light of volatile markets?
Well, first of all, I think it's good that we are sticking to our climate neutrality goals. We are rather thinking about how, and I'm talking to a lot of CEOs in Davos who are very keen to invest in climate neutral innovation. So I think that's not a contradiction. Yes, we have to stay with fiscal discipline. We need that because we're an anchor of stability in Europe and we have to remain that. But that does not exclude that we target investments in the public sector on the topics I mentioned by being more flexible on debt. But the flexibility has to go to the benefit of our growth potential, and that's very important, that we don't use additional flexibility for government consumption, but for investment into the future to raise our growth potential.
How hard is it going to be to change the debt brake after the election? Because there is a view by if you're crunching coalition partners, you need a majority, two-thirds majority to get there. But is it going to be possible to change without changing the constitution?
I think to get such a large... No, I mean, it's a constitutional rule. So by definition, you need the two-thirds majority, right? And that will only happen, I believe, if we have an ambitious program overall. I don't think there will be a majority in isolation to only change the debt brake and to do nothing else. We will also need an impulse on the tax side, on economic reform to increase our growth potential. That, I think, has to go in lockstep. Otherwise, I don't think there will be consensus in the population.
I apologise in advance for asking you a question you've been answering for a long time now. But I had an interesting conversation with a very senior member of the German government off the record the other day, so I'll couch how I say this as well. Why is Germany and the establishment so against Andrea Ochel's move on German banks, on Commerzbank specifically, given the fact that the profitability of the Italian bank is 3 times that at a minimum of what Commerzbank is. And Germany is overbanked, sir. You've got 1,400 banks, give or take. That's more than the UK, France and Italy put together.
I mean, Germany is wide open for foreign investment into our banking system.
But just not on George Shell.
We've just had ABN AMRO buying one of the largest private banks in Germany. BNP Paribas bought a large private bank in Germany that was formerly owned by HSBC. 5 of our systemic banks are non-German. American banks, UniCredit itself, ING. The world is doing business in Germany in the financial sector. 2 of our largest insurance companies are French with AXA and Italian with Generali. They've grown organically. We're wide open for foreign investment. In this specific case, the behavior of the potential acquirer was very aggressive, very opaque, intransparent.
Your final point for me.
Hostile takeovers are not a good thing in systemic banks. So it is all about the specifics of this case. It is not a general statement that Germany is not open for business for global investors.
Your experience, and you have a wealth of financial experience from the public sector and the private sector as well. When you're in the private sector, you wouldn't have thought twice about being one of the banks supporting UniCredit on a bid like this.
That's not the question here. We're in the government. We need to protect the safety and stability of a systemic banking sector. And this type of behavior of opaqueness, hostile takeovers in systemic banks don't tend to be successful. And so in that sense, this is all about this specific case, not a general statement about the banking system in Germany.
The optics here, though, look as though Europe cannot tackle its competitiveness issue, because every time one situation turns up, there's some sort of hurdle, and that the German bank consolidation story is almost a sort of a metaphor of a symbol as to why Europe can't lift its game competitively. What do you think needs to get done here to make progress in 2025?
First of all, if you compare the profitability of the German banking sector a few years ago with now, it's changed massively, right? I mean, the private banks have solved a lot of their problems, have undergone very substantial changes in their business model. They've done structural adaptations to the new world. They're much more profitable now than they were. The same goes, by the way, also for the public sector. The public sector banks have gone from 1,000 to 300 plus in a few years. The mutual banks, the same thing. So in that sense, the statement that there is no consolidation and no change in the German banking sector is absolutely wrong.
Let me push on to competitiveness a little bit more, because we are waiting to see whether there are tariffs coming from President Trump. How would Germany look if there were targeted tariffs, particularly on German autos?
Well, first of all, no tariffs have been announced, contrary to some expectations. And my approach is we want to seek the dialogue with the new administration. I've been active in government under a Trump administration and a Biden administration, and we've had very close dialogue with the U.S. administration in both cases. We're partners in the G7, we're partners in the G20, in many other international organizations. There's a strong bilateral relationship. The United States has just become our biggest trading partner. So, of course, Germany is vulnerable to tariffs given our exposure to global trade. That's a natural. But I do think, and some of the statements that we've heard also indicate that there's also interest in actually strengthening the trade ties, because both the US and Germany have a lot to offer to each other in terms of energy, digital services, machines, cars. The trade relationship between the US and Germany is much more complex than only one product.
We spoke about regulation earlier, but I wonder whether regulation needs to come down to an extent, because even if Trump doesn't lob tariffs, he's still changed regulation on light and medium vehicles in the United States on emissions. But those same rules don't apply in Europe, much stricter targets, which means you're still forcing customers to buy electric vehicles, you're still forcing German autos to transition, while they're embedded high costs, as we know, through these negotiations, wage negotiations. Doesn't something need to change on the regulation side to help out German industry?
Well, of course. I mean, as we speak, we are having a discussion around the emission targets for this year, and the German government has taken the position, yes, we do need more flexibility. So in general, we do want to adapt to the consumer demand being lower than was anticipated when the rules were crafted. So that debate is ongoing in the European Union. Otherwise, I completely agree with you that Europe in general and Germany in particular has to change its way on bureaucracy. We just made a very far-reaching proposals to reduce very substantially the sustainability reporting rules in Europe, and the Commission is about to make a proposal on this. And I think that's extremely important because it will show the direction of travel. It is true that German businesses do complain as one of the key items to us as being overburdened by too much reporting, too much red tape. And this is something we have to solve domestically, so we can't only finger point to Brussels, but we have to also join forces in Europe to reduce the reporting requirements that comes from the European Union.
To stop Europe becoming museum pieces, I've heard a couple of times around here as well, it's going to need better regulation. It's going to need to be smarter about its industry going forward, maybe create international champions, as we've heard from Ursula von der Leyen as well. But we also need more money. And if the money's partially going to come from changing rules in Germany, but a lot of countries have 100% debt to GDPs, thereabouts. They're running 5, 6, 7% deficits as well, including some very big countries such as France. Where's the money going to come from? Does it actually need to come from Eurobonds, common issuance of bonds, and actually Germany dropping perhaps its resistance to some of that common fundraising on a bond basis across Europe?
First of all, on one thing I beg to differ, reducing bureaucracy doesn't cost anything. That's the magic of going this route in terms of economic reform, because it does have the appeal that it actually takes costs out of the system. It makes companies more profitable, hence they have a higher ability to pay taxes. It could even be revenue accretive if you think it through. But there's definitely no cost to the public sector, which makes this type of reform particularly appealing. On the European financing, I mean, as you know, we've participated when the corona crisis was at its worst in the Next Generation EU program, but we do not think that this should be a general concept. If you look at the success of several European member states at reducing their debt, there is a path for reform and for improvement within the existing system. And we really need to know what European financing is for. And one of the biggest opportunities that we'll have in the coming years is the European multi-annual financial framework, the budget of the European Union, right, which drastically needs to move to modern expenditures, incentivizing modernization, structural reforms, growth, enhancing public investment, etc.
We have to leave it there. Thank you. And I know some questions that we may sound repetitive, but we need to ask for our viewers a bit of an update on that one. So thank you, Jörg. Really nice to see you as ever. Jörg Kukies, who is the German Finance Minister of